Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 26th, 2025, and we are diving deep into the NZDUSD currency pair, which is at a very interesting juncture. The big story right now, dominating the headlines, is the immense pressure on the New Zealand dollar ahead of the upcoming Reserve Bank of New Zealand policy decision. Multiple sources, including FX Street and Forex.com, are reporting a distinct bearish bias, with the market widely anticipating that the RBNZ will signal further rate cuts. This expectation of a more dovish monetary policy is fundamentally bearish for a currency, as lower interest rates make it less attractive to foreign investors. Consequently, we've seen NZDUSD lose traction and drift down towards the psychologically important 0.5600 level. Now, let's turn to the charts to see how this fundamental narrative is reflected in the price action and what key levels we need to watch. We're starting here with the daily chart showing all the data from mid-2024 to now, giving us a broad perspective on the long-term trend. As you can clearly see, the pair has been in a significant downtrend since peaking above 0.6350 in late September 2024. This downward trajectory has been marked by several periods of extreme volatility and sharp sell-offs. Notice the massive candles on November 8th, November 15th, and January 17th. These indicate days of intense selling pressure where price momentarily crashed before recovering significantly by the close. While the long lower wicks suggest some dip buying, the overall pattern of lower highs and lower lows remains firmly intact, confirming the bearish long-term trend. The most recent major high was established around 0.5800 in early October, and since then, the price has failed to make any meaningful recovery. Let's zoom in on the price action from September onwards to get a clearer view of this recent downtrend. Looking at this more recent period, the bearish structure is undeniable. After the drop in early November, the price has been consolidating in a lower range, mostly between 0.5580 and 0.5680. The 0.5680 to 0.5700 area has acted as a firm resistance ceiling on several occasions. Conversely, the area around 0.5580 has provided some short-term support, as seen during the price action on November 20th and 21st. The last 5 trading sessions, in particular, show a gradual slide downwards from a high of 0.5675, perfectly aligning with the news of growing bearish sentiment ahead of the RBNZ meeting. This drift lower suggests that sellers are in control, but are cautious about pushing prices aggressively before the official announcement. Now let's switch to the 1-hour chart to examine a specific period of volatility earlier this month, between November 5th and 6th. Here on the hourly chart from November 5th, we can see an attempt at a recovery from the 0.5640s up to about 0.5665. However, this upward momentum quickly faded, and the price began a steady decline throughout November 6th. Notice how the price action created a series of lower highs and lower lows on this intraday basis, culminating in a sharp drop towards 0.5622. This microtrend highlights the persistent selling pressure present in the market. Even minor rallies were quickly sold off. This is a classic sign of a bear market where sellers are eager to enter at any sign of strength. Now, for the most up-to-date view, let's move to the 15-minute chart to analyze the price action over the last few days. This 15-minute chart shows us the action from late November 20th through to the end of the session on the 25th. We can see the dip down to that key support level around 0.5580 on November 20th. Since that low, the price has been grinding slowly higher, but the movement has been choppy and lacked conviction. The price has essentially been trading in a tight range, capped by resistance just below 0.5630. This type of price action is very common ahead of a major news event like a central bank meeting. It shows the market is in a state of equilibrium, or a holding pattern, with neither buyers nor sellers willing to commit to a direction until they have more information. The volume is relatively subdued, further supporting this idea of a market waiting for a catalyst. The immediate challenge for bulls is to break above the 0.5625 to 0.5630 area. while bears will be watching for a break of the recent lows around 0.5600 and the critical 0.5580 support. So, to recap, let's pull back to the daily chart and summarize the key takeaways. The long-term and short-term trends are bearish, heavily influenced by the expectation of a dovish RBNZ. The critical support level to watch is the recent low at 0.5580. A break below this could open the door to the November 20th low of 0.55748, and then the more significant November 4th low near 0.5530. On the upside, immediate resistance is found around 0.5630, with a more significant barrier at the 0.5650 to 0.5680 zone. So, what are the potential scenarios? The most likely scenario, which I would place at a 70% probability, is that the RBNZ meets or exceeds dovish expectations. In this case, we would expect to see a decisive break of the 0.5580 support, likely targeting the 0.5530 level in the short term. A daily close below 0.5580 would reinforce this bearish outlook. A less likely scenario, with about a 30% probability, is a hawkish surprise from the RBNZ, where they hold rates and signal a more data-dependent or neutral stance. This could trigger a short squeeze, pushing the price to break through the 0.5650 resistance and potentially test the 0.5700 level. The main thing to watch is the RBNZ policy statement and the subsequent price reaction at these key support and resistance levels. A strong volume breakout in either direction will likely signal the next leg for the pair. Thank you for watching this analysis on Explain the Charts. If you found this helpful, please hit the like button, subscribe, and turn on notifications so you don't miss our next update. Please remember, this content is for informational purposes only and is not financial advice. Always conduct your own thorough research and risk assessment before making any investment decisions.